I'm Avril Hong in Singapore. You're watching the Asia Trade. Here are your top stories this hour. Asian stocks set to start the week on a positive note after data from China, but a potential U.S. government shutdown this week threatens to delay the release of key data. President Trump set for a bipartisan meeting later to discuss a short-term spending bill that would only fund the government till November. China's industrial profits surged in August, suggesting a national campaign to tackle overcapacity and competition is paying off. Let's take a look at how markets are shaping up for the session after a firm close on Wall Street and shrugging off pretty much what we got in terms of geopolitical headlines, with the Russians suggesting that recent NATO comments were provocative. That did play out in an oil price spike, but that soon reversed as investors focus on oversupply in the markets. We have Bloomberg reporting suggesting that a November hike from OPEC Plus on supplies are likely, but for the moment, investors in the Asia-Pacific seem to be focused. Take a look at how futures are faring on some of the positive headlines as well, not just from Wall Street, but China industrial profits and how that bucked expectations, including from Bloomberg Economics, of a decline. We are also seeing U.S. futures ticking higher, so we could see that extension of the positive close from Friday. Bond futures pointing to slight upside, but as I said, we are really focused on the energy complex. We did see oil Brent futures actually closing above $70 a barrel last week for the first time since late July, but that looks to be reversing as the focus, as I say, is on this output hike for November and supplies in the market. Now, we are also keeping tabs on a looming government shutdown in the U.S., and the U.S. president is scheduled to meet with the four congressional leaders, the top four congressional leaders, on Monday. The bipartisan meeting comes a day before federal funding is set to expire unless both sides can reach an agreement on a short-term spending bill.
Our view going into the meeting is that we want to find bipartisan common ground to find a spending agreement that avoids a government shutdown and actually meets the needs of the American people in terms of their health, their safety, and their economic well-being.
Let's bring in Bloomberg senior editor Wendy Benjaminson for us. So, Wendy, we are seeing the expectations of Trump to meet some of these congressional leaders. What is expected from that? How likely are we to see a government shutdown?
Well, I think we're very likely to see a government shutdown at this point. There is nothing politically advantageous to either side to give in at this moment. What they will be sort of negotiating tomorrow afternoon is the Democrats' insistence that that the bill, the short-term spending bill, which only funds the government until the end of November, includes some new health care money that was cut out of a previous bill that would leave a lot of middle-class and working-class people possibly without health insurance again for the first time since the Obama administration. And so what the Republicans want is, their position is, let's just pass this bill. We're up against a deadline, and then we can talk about your health care spending. The trouble is the Democrats don't really trust the Republicans. They've pulled the football away from them before, from the Democrats before, and so I think there will be a lot of talking and then a lot of spinning it for reporters, and then I'll be very surprised if they are able to pass this bill. The Republicans need 7 or 8 Democrats to vote with them for the bill. And I just don't see that happening at this moment.
And it also feels like, just based on the tone, the Republicans feel they have the upper hand. What is your assessment? Do they?
Yes, they do, because they hold the majority and the presidency. So if they can, but I mean, they won't have the upper hand in terms of if the government shuts down, that's going to be bad for everyone. And the blame is usually shared. Republicans will try to blame Democrats. Democrats will try to blame Republicans. And voters will pick who they want to blame for this, probably based on their own political leanings. But that also means Trump may follow through on his threat for more mass firings of federal workers. That is a tactic. He was sort of planning these layoffs, firings anyway. But that may be a tactic to get the Democratic senators in Virginia and Maryland, the D.C. suburbs where a lot of federal workers live, to vote with the Republicans. We'll see if they stand firm or not.
This also begs the question what this means for operations overall, including on tariff collection. How might that be affected?
Well, what the administration or what the Office of Management and Budget considers essential operations always continue in a shutdown. So the military shows up for work, and other essential workers, and certainly people who are considered political appointees, they all show up for work. They're not going to get paid on time, but they are required to show up for work. And what the Homeland Security Department has considered essential is collecting tariff revenue. So that will continue unimpeded, as well as all the other Homeland Security operations in terms of immigration enforcement. That won't stop in the shutdown. In terms of customs, border protection, things like that will all continue. In addition, of course, the Defense Secretary is calling all the hundreds of generals and admirals from around the world to meet with him and Trump on Tuesday for sort of an esprit de corps meeting. And shutdown or not, that is still happening.
Wendy, thank you so much for running us through all that. Bloomberg senior editor Wendy Benjaminson for us. Now, apart from a potential government shutdown, here's what else is happening this week. China's PMI data, set to be the focus on Tuesday, is expected to show the economy slowing in the third quarter. Also that day, the RBA's rate decision. Bloomberg Economics expects the central bank to keep rates steady. China's Zijin Gold will also debut in Hong Kong then, and the firm is aiming to raise $3.2 billion in what could be the world's second largest IPO this year. And on Friday, we'll get September's U.S. jobs report, the first since the Fed began loosening monetary policy. Another weak print could reinforce expectations for more rate cuts. Of course, the data release could be something that's affected by a potential government shutdown. We also have Chinese data from over the weekend that showed us industrial profits for August surging after months of declines, and the signal that national campaigns to tackle overcapacity and excessive competition, they seem to be bearing fruit. Let's bring in Fenner, head of business and industry economics at Westpac. Sian wanted to talk about the U.S. and the situation there, but first, give us your thoughts on the data over the weekend out of China. Industrial profits maybe buck some expectations of a decline. How much to you do you think is meaningful signs that the government's efforts to tackle overcapacity are seeing effect?
Hi. I think it's probably a little bit too early to say that the policy that they've undertaken is actually having a true effect. The reason I say this is that it's quite volatile from month to month, and as the Stats Office themselves said, it is actually partly that big jump that we saw was due to base effects. Coupled with that, we also had sort of some bring forward in tariffs. So it's something that it's positive, it's moving in the right direction, but we've got to see about some longevity of whether or not it's going to persist.
And that would shift the focus to the manufacturing PMIs also due this week. How much are you seeing that potentially as being a bit of a pillar of support, given how exports have been faring?
Yeah, I think, exports generally, they have been faring better than what we actually anticipated, say, back in April. But, we do see that, the headwinds to the export sector clearly have been rising. So the PMI manufacturing is likely to remain fairly soft, given that sort of external backdrop. For the PMI non-manufacturing, though, that's, probably going to continue to outperform, particularly as we sort of move into the golden week of sort of spending. So we see that as being sort of some stronger growth, signs of stronger growth on that front.
All right. We are also keeping tabs on the situation in the U.S., as I mentioned a short while ago, and we were discussing with Wendy. I mean, the problem now is that even the data that, for example, the bond market is going to be focusing on, that could be disrupted. How do you assess the U.S. economy when, the data that's incoming, that's crucial for markets, might not come in as expected?
Yeah, I mean, I think that's a real thing about this sort of shutdown. Obviously, it has implications both in terms of growth, the short-term impact. Every week, sort of a rule of thumb takes off about 0.1 off that quarter. You can get some bounce back, but I mean, it's the data. So particularly, we are in a situation where we're wanting to be, sort of analysing, how are tariffs actually feeding through into inflation, and of course the labour market. We saw back in 2013, it was 16 days for a total shutdown, and that saw delays both in terms of the non-farm payroll and inflation data going forward. So it's not just whether or not we'll get Friday's data for the non-farm payrolls, but could we actually even, not actually receive the inflation figures as well.
That being said, we did get PCE numbers pretty much in line. How much do you think this gives economists the focus to look at, the path of inflation and how that informs what the Federal Reserve is going to do?
Yeah, so I mean, I think, the data we've been seeing, I mean, it's a bit of a conundrum really, because I mean, we've got on one side, I mean, it's backward looking, but, we have had strong GDP upward revisions, monthly household spending is also running at a fairly solid rate, although that was with a drag on the sort of the savings rate. So households are pulling back, are drawing on their savings. How much more can they do that ahead? If we've got inflation rising, as we expect, their purchasing power is going to decline with tariffs. Combine that where you've got that softening in the labour market, you're not getting those new jobs, and it does sort of suggest that the headwinds for consumers going ahead is rising.
It's interesting because that backdrop that you just highlighted could also apply to Australia. I mean, hotter than expected inflation and then potential weakness in the labour market. How are you expecting the RBA to evolve when it comes to its signalling to the markets?
Yeah, so I mean, firstly, I think if anything, that sort of little hotter sort of partial inflation reinforces our sort of long-held view that September was going to be the RBA remaining on hold. It's probably going to be unanimous. I think really people will be sort of looking for exactly as you said, that signalling. I suppose a couple of things I'd sort of add to that. First of all, this is a partial indicator. The RBA has signalled that they, while they will take note of this, it's not. They want to see a full quarter, and with that, we also expect that there's probably going to be some payback in September. So while September quarter as a whole may be a little bit hotter than the RBA's forecast, as we move into, the December, we're actually expecting that to come down a little bit. And going forward, we still see inflationary pressures as being such that the RBA doesn't need to keep rates at sort of this sort of slightly, tight at 3.6, and further rates cuts are ahead.
Sian, what about the tariff risk? Because last Friday was a reminder, given the headlines that came through from Trump, of this very risk. We saw, the impact on the Indian markets, for example, and this is also an economy that has quite squarely been in the crosshairs of the US president. Now with these threats of pharmaceutical tariffs, how at risk is the Indian economy, and to what extent can perhaps more dovish monetary policy from the RBI, which also meets this week, offset some of that?
Yes, so I mean, India has definitely been in the crosshairs with that 50% tariff, and now, also with visas where, they're sort of, heavily involved for the US, and now the pharmaceuticals. I suppose there's a couple of things. First of all, this is a post, so we're still waiting for a little bit of details there, and also whether or not, at the moment, there's some carve-outs, if you like, in pure Trump fashion. So carve-outs for those that are actually, breaking ground or have construction underway, and also those that are, if it's a generic good. And for India, that matters because most of their pharmaceutical goods to the US are generic. That said, clearly this is a headwind, particularly the longer that these tariffs of 50% remain for the Indian economy. But there's some offsets as well. So they've also had the GST fee cut, and that will provide some boost for consumers. I think for the RBI, we're looking for them to keep rates on hold. It's probably going to be a tight, sort of a live call, if you like, because inflation is low. But we're looking for them to remain on hold this week. But we do see that they do have the space if we do see that these tariffs remain in place at 50%, and consumption, particularly after Diwali, maybe if that fell off, that they will actually provide some more support.
Sian, great to chat. Thanks for setting us up for this week. Sian Fenner, Head of Business and Industry Economics at Westpac. We'll have more heads on the Asia trade. This is Bloomberg.
Bloomberg has learned that Apple has developed a ChatGPT-like iPhone app to help test and prepare for a long-anticipated overhaul of Siri coming next year. That's as investors are veering its focus away from Mag 7 stocks in favor of a group of AI-focused stocks. Let's bring in our tech correspondent Annabelle Drewlers with the latest. Annabelle, so are we expecting Apple to catch up on the AI, but these features are not necessarily going to be made public as of yet?
And that's sort of probably one of the questions we've got out of this. Is this something that actually should be offered to the public instead? But yes, as you said, let's set the context here. So we know that Apple is preparing a major upgrade of its Siri voice assistant. What we've heard from sources, what we've reported as well, is that that could go live as early as March of next year. Now, it is a very, very major undertaking for the business, and it's so major, in fact, that actually Apple has now apparently built this internal-only chatbot app, a fully fledged one. Its code name is Veritas, and then users or internal users can submit queries. They don't need to use voice interaction, for example, so text prompts instead. They can have full conversations, they can ask questions just like they would to ChatGPT. And then they can also ask Veritas to do things like edit photos, for instance, or search through data that they have on their device, not just searching what's publicly available on the web. But yes, to your point, I mean, are we reaching a milestone where Apple is going to be looking at releasing this to the public? What we understand is no, that's not the case. This is purely an internal system, and the real value of it for Apple is just to test how well the new Siri will work.
And as Apple seems to lag in this AI race, despite some headway being made here, potentially with this ChatGPT-like app, the question also becomes, when it comes to the Mag 7 group of stocks, how much are investors searching for, companies beyond that, the future winners? Because the Mag 7 now, to some, looks a bit passé.
Yeah, to some, and I think it's also important to distinguish what exactly is in the Mag 7 and what still looks attractive in the Mag 7. NVIDIA, Meta, Microsoft, Alphabet, these look still attractive. But to your point around Apple and lagging in that story, for instance, Apple, Amazon, Tesla, these are other names in the Mag 7 where the AI story is really less robust, you could say. And so that is sort of what we're hearing from a lot of different analysts, that you've got valuations that are just so stretched now for the Mag 7 because you're coming up to that 3-year mark of ChatGPT being released. And in that time, it's really been that big story around buy into the Mag 7. That is the best way to play the AI trade. But as we've seen, there's been a really rapid appreciation of different names like Oracle, for instance, Broadcom. AMD has a strong AI story. Palantir has a strong AI story. And so investors are saying, look at names beyond the Mag 7. So maybe you're looking at the Great 8, the Golden Dozen, the 10 AI of Gen AI. I mean, there's a lot of different names that are being thrown around, but the main idea of it is go beyond the names that we've been talking about for the past few years.
What about going beyond the United States? Because we have seen really incredible AI developments over in China as well.
Yeah, that's right. And I think just from a valuation basis alone, I mean, you take a look at some of the biggest gainers, for instance, this month in the Hang Seng Tech Index. It's Alibaba, it's Baidu, it's even SenseTime, which was once seen as a laggard in the Chinese AI race. It's still had a very strong month. But when you take a look at their valuations, even in respect of the gains that we've seen recently, they are still far behind their peers in the Mag 7. So you're talking at roughly half of the valuation on a PE basis. that is sort of what also, I mean, investors are saying is that, yes, you've got advancements into AI, for instance, in Alibaba. They've just released a new Quen model. Tencent's just made an update. Momenta, the autonomous driving technology company, they're also making valuations maybe a lot larger than before, fundraising at a larger valuation. So there's really a lot of different changes that investors are paying attention to from China.
Bloomberg tech reporter Annabelle Drewler's there with everything on tech. We have more ahead on the Asia trade. This is Bloomberg. The Wall Street Journal says Beijing is seeking a significant concession from the Trump administration with regards to Taiwan. It wants Trump to officially oppose Taiwan independence. Let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. And Steve, this is not merely not supporting Taiwan independence, this is actively opposing it.
Yeah, so it would be a significant shift in tone, definitely, from a very neutral tone on Taiwan independence matter to one that is more in line with Beijing's view of the one China policy. Of course, the United States acknowledges the one China policy, but does not fully endorse Beijing's view of the one China policy. Of course, the United States has for a long time employed strategic ambiguity under the umbrella of the Taiwan Relations Act. But again, Beijing has been amping up its diplomatic efforts, especially now as the two sides try to build deliverables into any meeting that might happen on the sidelines of APEC at the end of October, early November, between Donald Trump and Xi Jinping. And this would be a major deliverable if Beijing were to get a Trump administration to change the wording to does not support independence to actually opposing independence. That would be a significant one. Now, there's been no indication from what we've been able to gather that the State Department is leaning towards that kind of shift or that Trump himself might be leaning towards that shift. But we do know, of course, Donald Trump tends to be more of a transactional president. He is looking for possible ways to get his own concessions from Beijing. This would, however, be a major diplomatic concession if it were to prove true. So no doubt Beijing is trying to get this. They've been trying to get this for quite some time. In fact, if I remember correctly, back in November of 2023, when Biden met with Xi Jinping there in San Francisco, that was an ask by Xi Jinping. Will you change the wording to opposing Taiwan independence? That is essentially de facto endorsed by the Taiwan president, Lai Ching-te. Now, again, the U.S. did not change its policy despite the urging of Beijing. Now it is from the sources that the Wall Street Journal is quoting is that Beijing is doing the full diplomatic press to see if Donald Trump is more amenable.
Steve, thank you. We'll keep an eye on that potential meeting between Trump and Xi. Our chief North Asia correspondent, Stephen Engel, for us. Let's take a look at how U.S. assets are faring after these geopolitical developments and headlines. Of course, Wall Street pretty much shrugged all that off when we got U.S. PCE numbers that were more or less in line with expectations, allowing them to bank on the path of Federal Reserve rate cuts. We are looking at futures pointing to some further upside. The dollar did waver throughout last week, though. We're seeing it looking pretty flat at 1,200 for the moment on the Bloomberg Dollar Index, and bond futures are pointing to some upside. What's been also quite interesting is how, on the long end, some of these supply fixes globally have actually alleviated some of the concerns on the long end of global debt. We'll have more heads on the Asia trade. This is Bloomberg. Let's take a look at how futures are faring after a firm Wall Street handover, looking like could be quite a bright start. Of course, we are watching the energy-related stocks after oil reverse some of the gains from last Friday with geopolitical developments, of course, in the backdrop. Some of these comments coming out from the Russian side on how NATO's comments were provocative. But of course, it's about the path of the Fed after the PCE data as well. And we have some of these economic data points coming out of the Asia Pacific. Bloomberg MLife strategist Mark Cranfield is here to walk us through this. So what are you going to be watching most closely this week?
Well, it's never too early to be thinking about year end. And we are about to go into the fourth quarter. So by the end of this week, people will have to really start thinking about where they want to be positioned to go into the rest of the year. And probably they'll be optimistic about it. We've seen a pretty good year for equities around the world. Bond markets are starting to come back. People seem to be fairly confident that the Fed's path is to lower interest rates again. So the setup is pretty good. We've also got the earnings will be coming ahead for the next quarter for the US that will start coming through by the middle of October. And it's probably going to be a decent season. If you think of all the AI hype which is going on, people will be expecting that will be reflected in the numbers of the big tech companies as well. So here we are. Currency markets are fairly benign as well. Oil market is behaving. Everything apart from geopolitics is falling nicely into place. So by the time we get through the end of this week, people will be starting to set up for where they're going to go over the weeks ahead. And it's looking quite promising at the moment.
You mentioned bond markets also coming back, and we have seen that, especially on long-dated bonds, right? What's really driving that move, that recovery in that end? And also, could we see that derailed given that we are also expecting the U.S. payrolls numbers as well?
The payrolls is unlikely to derail the bond market. It would need to be a really shocking number. Even then, you'll probably only get a knee-jerk reaction. I think people are fairly assured that the Federal Reserve is going to do 2 more interest rate cuts this year. That's helping a lot. But the bigger story for the long end of the bond market is partly about steepening curves. We've seen such a steepening across the G10 markets this year that's embedded some very high yields into the market. At the same time, credit markets are performing extremely well. So you're already getting investors doing a grab for yield. They're willing to go further out in terms of duration to get that extra yield. It's starting to show up in government markets. And that's filtering through into better performance for bonds. And it probably will continue as central banks start to pull back a bit on long-end issuance. Now, the US has already hinted that they're going to shift more towards the short end, and Japan, most significantly, is already doing so. They've reduced some of their super long sales. They're going to do it again, most likely in the fourth quarter. And that has been the tail end risk for markets around the world. At one point, it was the long end of Japanese markets that was swinging around, and that was hurting the rest of the markets, US, UK, and France in particular. That has died down a lot. Japanese markets are much more stable, starting to see some curve flattening there. That's likely to filter through to G10. A much more stable environment as we go through to the fourth quarter.
Where does this leave dollar-yen positioning, especially with the LDP race this weekend?
Yeah, we go into this week with positioning, short positioning by leverage people as high as it's been all year, which probably needs to be cut back a bit because we also have the Tenkan report. Now, this Tenkan report only really needs to meet expectations, and that will open the door for the Bank of Japan to move in October. As you say, there's also the LDP race. They've been pretty good. The leaders in that LDP race have not really been commenting too much on monetary policy. So it looks like they're standing back and allowing the central bank to do its job. Providing we get a decent Tenkan report, that looks like the final piece in the puzzle for the Bank of Japan to hike. Ueda speaks at the end of the week, interestingly, and that will give the governor just what he needs, probably, to be able to push ahead and say, yes, this 25 basis points is on the table for October.
Bloomberg MLife strategist Mark Cranfield there with what to expect the rest of the week, as we're also watching the commodity space, especially when it comes to oil pricing. Remember, we talked about that spike that happened on Friday, and that had repercussions for the U.S. session. We continue to see that gain, which was the biggest weekly gain in more than 3 months. And, of course, a lot to do with various factors, including the fact that we do have an OPEC Plus meeting this week. The expectation is for more output starting in November. Not to mention, of course, ongoing geopolitical tensions, whether we're talking about Russia, Ukraine, NATO, or, of course, the ongoing conflict around Gaza. Egypt's foreign minister now saying that Arab states are in full support of President Trump's push to end the Israel-Hamas war in Gaza. Speaking to Bloomberg, Badr Abdelati also told us about the outcome of last week's meeting between Trump and officials from Arab and Muslim majority states.
It was a very, very encouraging meeting. It was positive, to hear from President Trump his commitment as a president of peace to end this ugly war on Gaza, this aggression, Israeli aggression against innocent people from our point of view. So this is very important and encouraging, and also to talk about no annexation, to talk about developing Gaza where people will stay on their own land, and even those who left their homeland, they are entitled to return back. Those are very encouraging signals, of course, and messages.
Did everyone leave with a sense of unity about what the path is? And what is Egypt's role going to be in terms of the reconstruction? Well,
we have a unified Arab and Muslim position. We are in full support to the vision and the plan of President Trump to bring an end to this unjust war against innocent people in Gaza. For us, we have our plan. It's an Arab-Muslim plan for early recovery and reconstructions of Gaza, and it's endorsed by the international community, including European Union, Japan, Norway, most African countries. And what next will be, as soon as we have a ceasefire, then we will move ahead with hosting an international conference in Cairo.
When will that be?
Yeah, well, as soon as we have a ceasefire. So we are talking about 2, 3, maximum 4 weeks from having a ceasefire to host it. And we will have 3 events. One will be dedicated for private sector, for talking about security arrangement in Gaza, governance of Gaza, who will govern
Blair,
Gaza.
The former prime minister? Do you think he could be like the governor of this authority?
No. I mean, we are talking about Palestinian ownership. Of course, they have to govern themselves.
But what do you make of that idea that's being floated in the press?
Well, again, I'm talking about the Arab Islamic vision and the plan. We are talking about security arrangement. We are training, providing training of Palestinian policemen. We are accepting deployment of international forces within specific parameters. And above all, the governance of Gaza will be entrusted to a Palestinian administrative committee consist of 15 persons, all technocrats, all from Gaza Strip, and they will run Gaza for a transitional period of time till we manage to empower the Palestinian Authority to ensure the unity between Gaza and the West Bank.
Egyptian Foreign Minister Badr Abdelati speaking with Bloomberg's Anne-Marie Horden. Some other top political stories we're following. Thai and Cambodian troops have clashed in the border area of northeastern Thailand, exchanging gunfire and launching grenades. It is the first such conflict between their forces since they agreed to a US-backed ceasefire in late July. Troops from both sides are now monitoring the situation, while Thailand's newly installed Prime Minister is expected to take steps to peacefully resolve the border dispute. UK Prime Minister Keir Starmer has framed his political survival as his country's best hope of defeating populism. Starmer is trying to regain the faith of Britain's electorate amid complaints his government is not taking radical enough action on concerns such as cost of living and migration. In an interview with the BBC, Starmer drew political battle lines with Nigel Farage's Reform UK.
We have not had a proposition like reform in this country ever before. We've seen it in France and Germany and plenty of other countries. This is a different fight. It is a fight about who we are as a country. It goes to the soul of our future. It will be heard and the effects will be there for generations.
Later on Bloomberg TV, we'll be hearing from UK Chancellor Rachel Reeves from the Labour Party conference in Liverpool. That interview is happening at the Times on your screens. Meanwhile, New York City Mayor Eric Adams has ended his re-election bid. The announcement follows reports that Adams was entertaining potential job offers from the Trump administration and the private sector. That's in exchange for bowing out of the race to allow former New York Governor Andrew Cuomo to challenge Democratic nominee Zoran Mamdani directly.
Despite all we've achieved, I cannot continue my re-election campaign. The constant media speculation about my future and the Campaign Finance Board's decision to withhold millions of dollars have undermined my ability to raise the funds needed for a serious campaign.
We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up for the Japanese market opens. We saw the Nikkei fall from record highs, and Japanese futures at the moment pointing to a little bit of upside. As we're watching the Japanese yen pretty range bound throughout the past week, we are watching JGBs as well. We saw the long end yields jumping last week, 40-year yields continuing to rise, although it's fair to say that the recent rally in the JGB space has been partly subdued given this reduction in long end supplies and the finance minister proposing trimming issuance as well in upcoming auctions. When it comes to the political landscape, though, that is the big question. Sanae Takaichi, a top contender to lead Japan's ruling party, suggesting that a renegotiation with the U.S. could be on the table if the trade deal doesn't serve Japan's interests. Japan economy and government editor Paul Jackson joins us now, and really Takaichi making lots of headlines, whether it's about her stance on the Bank of Japan, but now it's about trade.
Yeah, I mean, I think she's playing to her audience to give the impression that, hey, if you vote for me, if you support me, this is going to be a bit different. This is going to be a change from the Ishiba administration. I think if you look at the comments, they're not quite as robust as you might think at first glance. I mean, she's saying when the deal is implemented, if there are problems that emerge, then we'll look, possibly renegotiation could be one of the possibilities. So it's not quite as strong as you might get from that headline. Also, you know, it's worth noting some of the other candidates. Koizumi himself said, yeah, if there are issues with the implementation, then we'll deal with those at the appropriate level. It's not much of a difference, but it shows that Takaichi is trying to play this line of showing that this will be a change of administration if she's selected, while not going too far, because in the past, in last year's election, possibly she was a bit too forthright, and that harmed her chances of winning.
All this playing out in the polling, and what will this mean for the LDP race this weekend?
Well, the polls are kind of all over the place, really. There's a head-spinning variance in who's leading and who's in with a chance. I think the takeaway from the weekend polls is it's clear that Koizumi and Takaichi are still the two leading candidates and the two most likely to get round to the second round of voting. There's variance of whether Takaichi's leading or whether Koizumi's leading among LDP supporters. But I think the important thing is if we get to the second round of voting, it's really the MPs that become the key players in making this decision. And I think what's interesting from those polls we've seen at the weekend is that among the MPs, Koizumi has a lead, and even Hayashi gets more than Takaichi amongst the MPs. Still, many undecided, so I'd say the situation is still very fluid.
Bloomberg editor Paul Jackson here with the latest on what we're watching in the political landscape here in Japan. But let's discuss what it all means also for the economic backdrop. Let's bring in Jesper, Koll, expert director at Monex Group. Jesper, really good to have you with us. Break this down for us. I mean, we've been talking about Koizumi, Takaichi, we've been talking about Hayashi. Are there any meaningful differences that could potentially signal a shift in policy here in Japan?
Look, I think Takaichi is the only one who's got a mind of her own, and she's quite determined to actually go against what the elite bureaucrats and the consensus advises. Specifically, a little more fiscal largesse, is likely to be coming from her, as well as a greater and more aggressive push towards privatization and deregulation. So I think for markets, Koizumi, Hayashi, Kobayashi, these are all candidates that basically will follow the party line, will follow the directives of the elite bureaucracy. Takaichi is the one that is going to be a bit more pro-deregulation, pro-privatization, and from that perspective, for markets, probably the most positive candidate.
Right. What about the practicality of fiscal budgets here in Japan and the timeline in the political schedule for the rest of the year? Do these have any implications for what the next prime minister can do?
Shery, you make a very important point, and this is, of course, where the brokering of the coalition is going to become important. Yes, next weekend we get the next LDP leader, but to become prime minister, he or she will actually have to broker a coalition, with some of the opposition parties. And it's very clear that several of the opposition parties do want, some tax cuts to be part of this coalition agreement. So I think, the timeline is going to be forging that coalition, giving us another supplementary budget and more stimulative fiscal policy, and then you get the budget coming together in the months of November, December.
What's also interesting, Jesper, is how the MOF has signaled the reduction of issuance of long-end bonds for October, December. To what extent has it helped to alleviate some of the concerns in the markets?
No, Avril, and this is so where Japan just really, I just keep on marveling at Japan in the sense of how well coordinated the Japanese government actually is. You've got de facto complete coordination between the central bank, between the Treasury, the Ministry of Finance, as well as, some of the political leaders. So the counter to the hiccup that we had at the 20 and 30-year long end of the bond market reduced issuance, plus the Bank of Japan increasing its budget of long-end purchases. I mean, that's just from a policy perspective. This is the way it should be done. This is a government that you can trust.
What are the risks that we are potentially underappreciating here, Jesper? Because you cite Takaichi perhaps being more market-friendly. She is also talking about a potential review of the trade agreement with the U.S.
No, and look, I mean, she stands for Japan, in the sense of when you look at the trade agreement, this $550 billion, agreement is an unequal treaty. It's unheard of that 50% of the upside is going to be given, with no capital commitment to the United States of America. That's a very unequal treaty. It's certainly not in the EU-America treaty. The Koreans right now are having a huge problem agreeing to these sort of terms. So I think Takaichi is right in actually wanting to stand up for Japan rather than just kissing the ring of the American empire.
In that sense, how much is this treaty a geopolitical calculation from Japan and not necessarily an economic one? And in that sense, would it make more sense to actually pay for higher tariffs? I mean, I have heard economists talk about why shouldn't Korea investing $350 billion without any real clarity on how the profits will be divided? It's the same with Japan for $550 billion. Why not just pay the tariffs if this is an economic issue?
No, Shery, and this is the tit for tat. I mean, obviously Akazawa and the Ishiba administration, went into negotiations basically saying, okay, we will do whatever it takes to get to the 15% tariffs. And as a result of that, walked away, signing a covenant, signing an agreement that for all intents and purposes is not in Japan's long-term interest. And so, we shall see. It is very interesting to me that Takaichi is is the one of the candidates who actually brings up the issue, forces the issue, while everybody else is just sort of bowing over and sort of accepting it. So it's quite interesting, and it makes the real important point. Takaichi, whether it's not about whether you like some of these nationalistic and social policies of Takaichi, but from an economic policy perspective, she's got a mind on her own, and she's looking out for Japan's interest. And I can tell you, every CEO I meet with basically is in favor of her, as opposed to the other candidates who are basically all captive to the bureaucrats.
Let's talk a little bit about the CEOs. How are you expecting them to feel? We are getting the Tankan survey, and of course that was a major factor when it came to the Bank of Japan's policy decision later on, right? Will they feel more secure and continue investing now that we sort of have a trade deal, despite, of course, all of the questions that we're posing today?
It's so interesting. I think that the focus is actually going to be more on the non-manufacturing side. I think that the manufacturing side, the industrial companies, yes, there's a bit of a sigh of relief, that the 15% tariffs are there, that it's kind of business as usual. The big problem for industrial Japan is that made in China competition in third countries, the global south and in Europe, is increasing incredibly, and that's certainly putting a dampener on industrial confidence here in Japan. But the real focus for the Bank of Japan in particular is going to be on the service sector, on the non-manufacturing sector, where we're seeing every evidence in all the other surveys is that we're going from strength to strength because domestic demand is actually picking up and service companies are actually starting to get real price power. So the inflation agenda, because of growing confidence of Japan's domestic services industry, that's the key point to watch out for in the Tankan.
Jesper, Koll, always great to have you with us. Expert Director at Monex Group. Of course, we have plenty more ahead on Japan Ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. And the breaking headline on the Bloomberg, Moldova's pro-EU party is now set to win an outright majority in their elections. We were watching this to see if this parliamentary election, which has been marred by allegations of widespread Russian meddling, would have any implications for this country of 2 million people. It's wedged between Romania and Ukraine and on the path toward the EU integration. And we're now hearing that the pro-EU party is set to win outright majority, Avril.
And Shery, here are some of the stocks we'll be watching when trade opens in Australia, Korea and Japan shortly, including SoftBank, after it announced it's in talks with ARK Investment to invest in a major funding round into Tether. This comes as crypto assets wiped out $300 billion in value, one of the harshest sell-offs in months. SoftBank also has a stake in Klarna. We're going to be keeping an eye on some of these market moves. You're watching Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. In April, we're watching geopolitical tensions, especially around Russia and Ukraine, that sent oil spiking. We're also watching for an OPEC Plus meeting this week and U.S. payrolls numbers as well.
Yeah, it's really interesting how markets pretty much shrugged off those headlines coming from Russia, talking about NATO being provocative here, as the markets pretty much focus on the oversupply, this glut that we're seeing, especially given the expectations of what OPEC Plus is going to do when it comes to potential hikes in supply, Shery.
Yeah, we could see more output in November, but take a look at how we're opening in the Japanese session, because those energy names will be some of those to watch, as the Japanese yen has held pretty steady against the U.S. dollar in the past week. We're talking about some of those gains being pared back in the U.S. dollar, but still a weekly gain. So the Japanese yen still under a little bit of pressure around that 149 level, very close to that 150 level. And we had already seen Japanese stocks coming down from record highs. We continue that downside 0.6%. 0.5% for the Nikkei, and the 10-year yield holding at that 164 level. Of course, this week, what will be important is the Tankan survey and whether businesses feel that the environment is strong enough, of course, to continue increasing investments at a time when, of course, they're also contending with U.S. tariffs. Take a look at how South Korea is also coming online, because we had seen significant pressure on the Kospi. We had seen pressure on the Korean won as well. In fact, the Korean won falling to the lowest in about 4 months or so against the U.S. dollar. And it's those trade negotiations with the U.S. that investors are very much focused on. If Korea does have to pay up for that $350 billion investment fund into the U.S., what impact will that have in the Korean won is a key question. And really that trade deal, a concern here in Japan as well. We have seen lead contender Takaichi, for example, saying that that needs to be reviewed. The Korean won at 14.07 at the moment, Avril.
Yeah, Shery, aside from some of these trade negotiations, investors also watching central bank decisions this week, including from India and Australia. The RBA is set to keep things unchanged, and we are watching the moves in the greenback. Remember, Australia seen as that risk currency. Is that something that's been underappreciated by the markets? And looking at how we are faring on the stocks at the early goings, it's been really interesting how energy and commodity names have really been the boost, along with financials last Friday as well. And keeping tabs on where Brent is faring after it reversed the gains last Friday, and that's despite closing above the $70 handle. How is that going to play into Asia trade this week, especially with India restarting its purchases of Iranian energy? We have pretty much unchanged or sideways move on the 10-year in the U.S. On the 2-year, you're seeing that yield come down by about 1 basis point. Let's bring in Xi Qiao. She is financial advisor and managing director at UBS. Really good to have you with us, Xi. So we're looking at, the Chinese backdrop as well, given all these geopolitical ramifications. And what's been interesting is how the data that's been coming out over the weekend shows an improvement in industrial profit. How does the macro backdrop inform what you're seeing in positioning?
Absolutely. I mean, if you're talking about just China for now, I mean, we certainly feel additional policy support is needed as growth momentum this weekend. I mean, the growth momentum weakens across the board in August. So we're expecting more weakness in Q4. So right now, our overall focus would still be on overall probably more U.S. markets. In China would be more preferred in China tech, AI-driven type of growth. Companies, cloud, progress, and domestic chip innovation certainly support our positive stance on the sector. We're in China, and we remain neutral on just broader Chinese equities.
U.S. stocks do look pricey, though. How much are you watching out for Fed rate cuts and how that informs meaningful earnings growth?
Yeah, that's a great point. I mean, certainly a lot of worry out there about, the uncertainty in tariffs, about stretch valuations. But we are still feeling the economy is very strong fundamentals, strong earnings growth, expecting about 9%. And jobless claims is at lowest level since mid-July. Q2 GDP is the highest since Q3 of 2003. So we feel the market is going to still stay strong and expect good value in U.S. equities over the medium term. So we have a price target about 6,800 to 7,000 by June of 2026.
How much of that will be propelled by artificial intelligence bets, not only in the U.S., but perhaps in the Chinese markets where valuations are more fair?
Yes, absolutely. That's a great point. I mean, we certainly feel like AI is a huge driver in the valuations, especially with all the growth in tech. But diversify exposure in AI across infrastructure, semiconductors, and just applications should capture accelerating adoption. So we feel like, even though AI is going to be the main driver, there's pockets of AI that we are still focusing on, and mainly still focusing a lot of the U.S. tech mega caps.
When it comes to the economic data, of course, you mentioned a lot of the ones that we'll be following from the U.S. Here across Asia, we are also getting, not to mention PMI numbers, we also got industrial profits out of China, but also an RBA rate decision later in the week as well. Is there anything that you think will drive the markets, especially in the short term?
Absolutely. I mean, we certainly think the momentum will probably continue in the short term. Could get some, pullback from uncertainty and tariffs. But one of the main drivers would probably be, rates as well. And then we do expect that rate with the current rate reduction, that will probably continue. And we expect that the Fed to probably cut rates by another 25 bips at each of the next 3 meetings. So that, if that stays on course, then the market should continue its momentum.
What is that going to mean for the dollar? Are you expecting a meaningful leg lower?
I mean, for the dollar, it's we still expect that with reduction in rates, I mean, U.S. dollar will probably resume its downward trend. In the meantime, we actually like gold a lot more, and we think there's a lot more room to go in gold, and we target about USD 3,900 for gold.
Xi Qiao, the yen pretty range bound for a while now. We do have the Japanese elections coming up this weekend, October 4th. Do you expect meaningful moves given who could become the next prime minister?
I mean, I think we try to, take some of the politics out of it and just looking more like at the fundamentals of Japanese equities, though that is a factor. But we're mainly upgrading Japanese equities to attractive at this point. And we believe Japan's domestic structural reforms, that has happened already are being increasingly recognized as key drivers of the alpha. So we feel like Japanese stock market is going to benefit from better than expected, also benefit from better than expected trade deals with the U.S. and its trading partners. So on that front, we are upgrading Japanese equities.
It's also interesting how when you look at Japanese stocks, I mean, these are among the economies that are still engaged with the U.S. on trade negotiations. And there are a lot of question marks about how the hundreds of billions of dollars in investment pledges, how they will actually play out. How are you assessing that as a potential risk for some of the markets, including Japan, South Korea?
Absolutely. I mean, I think there's still a lot more uncertainty, as you were pointing out here, to the tariffs. But we are still, as kind of just investors and helping clients navigate the markets, we want to look at fundamentals. We want to look at some of the still focus on the structural reforms, and some of the catalysts. Just key potential catalysts could include just more accommodating policies. Maybe easier than expected bundling of corporate earnings forecasts, and higher return on equity. So we are focusing a little less on the tariffs and more on the fundamentals as we try to navigate the markets.
Xi Qiao, always good to have you with us, financial advisor at UBS on this Monday as trading starts across Asia. And take a look at how SoftBank is trading at the moment, because this is one stock that we're following. SoftBank, ARK Investment, among potential investors in a major funding round for Tether Holdings. The fundraising could value Tether as high as $500 billion. You can see SoftBank under a little bit of pressure broadly with the benchmark today. SoftBank already has put bets on the growth of data centers. We know of that planned $30 billion investment into OpenAI. Take a look at Nidec. This is also a car gear maker, which is reeling from an ongoing scandal. Is now discovering more suspected cases of improper bookkeeping, including some involving a Swiss subsidiary, Avril.
Yeah, and we are also keeping tabs on some of the energy-related stocks in Australia. We're faring pretty mixed at the moment, but if you look at the specific sectors, energy is actually among the underperformers on the Australian benchmark, and this is against the backdrop of investors focusing on the supply glut, especially how oil has dropped given OPEC Plus seen increasing their output again in November, as Bloomberg reporting suggests. We'll have more ahead on the Asia trade. This is Bloomberg. President Trump is scheduled to meet with the top 4 congressional leaders on Monday. The bipartisan meeting comes a day before federal funding is set to expire unless both sides can reach an agreement on a short-term spending bill.
Our view going into the meeting is that we want to find bipartisan common ground to find a spending agreement that avoids a government shutdown and actually meets the needs of the American people in terms of their health, their safety, and their economic well-being.
Let's bring in Bloomberg managing editor Jill Deeses. Jill, is there common ground? Because by all accounts, it looks like we are headed for a U.S. government shutdown.
At this point, Avril, what we're seeing is both sides really digging in their heels on some of these issues. So the Democrats are really sort of stuck on this idea of getting some concessions from the Republicans when it comes to reversing some health care spending cuts. They also want an extension of some health care subsidies. These are issues that the Republicans say can wait until after they reach an agreement on this stopgap spending bill. Again, I mean, even if there's an agreement reached here, Avril, we're really only looking at a government that will continue to operate with this federal spending until mid-November, when they're just going to have to sort of negotiate everything again. So it kind of comes down to a matter of, if you're a Democrat, how much do you really trust that the Republicans are going to return to some of these key issues that they're looking at on health care. So that's where we stand right now. I think, at this point, we did expect Trump to meet at the end of last week with some of these Democrats, including Hakeem Jeffries, Chuck Schumer. That meeting didn't happen. Obviously, now we're once again coming down to the wire with this particular situation. So we'll have to see whether or not they actually agree to any kind of common ground during this Monday meeting. I think we'll have a better idea of where we actually look like heading into that Wednesday shutdown deadline after that meeting.
Yeah, if we do get a shutdown, of course, the payrolls numbers could be a risk because that's expected to come out on Friday. Who has the upper hand here, and are there any low-hanging fruits where they could achieve some sort of compromise?
Well, I think at this point, again, it's a bit difficult to tell just because you do have both of these sides really kind of digging in their heels. I'm not sure that the Democrats are going to get what they actually want when it comes to some of those health care issues. But the one thing that I will say in the Democrats' favor here is that the Republicans do need, I think, 7 members from the Senate to actually agree if they want to continue passing something that is going to keep the government open through that mid-November deadline. So that's one thing where they do have a little bit of leverage. Of course, I think, the concern with a lot of these sort of shutdown deliberations and discussions, these negotiations really comes down to, sometimes concerns over who might be blamed for something in the event that there are, mass concerns about, lack of work, et cetera. So we'll have to see if that's something that really comes into the calculus here. But again, I do want to stress that even if they're able to reach that stopgap, deadline and keep the government open until mid-November, this is an issue that is just going to come right back around again in a couple of weeks as they continue to negotiate towards something more long-term.
It is a recurring issue, and it feels like every now and again this is a conversation that resurfaces. But Jill, just wanted your thoughts as well. In the interim, when we look at the possibility of this shutdown, what might that mean for tariff revenue collection, given the operations?
Yeah, so actually the government has said that they want to continue collecting tariff revenue. They want to continue actually a lot of the sort of immigration efforts that they've been undertaking as well. So the government, the Trump administration certainly, I think, wants to continue to prioritize some of their big, political priorities that they've gotten this year. In the event of this, I think we'll have to see kind of how, some of that ultimately unfolds. But again, I think that's also sort of adding pressure here to the Republicans, obviously, to get something over the line. The way that they're sort of characterizing this is saying, well, we just want to pass a clean bill. Of course, again, if you're a Democrat, I mean, you're looking at, some of these things that the Republicans ultimately want, and you're saying, we need to actually get, something for ourselves on the table here. So really kind of bringing together this idea of, the reason why this is ultimately so tense and why, you're heading into these, I think, what may end up being very interesting negotiations later today in Washington.
Bloomberg managing editor Jill Deeses is there. Now, the Wall Street Journal says Beijing is seeking a significant concession from the Trump administration with regards to Taiwan. It wants Trump to officially oppose Taiwan independence. Let's bring in our chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, so actively opposing independence, how big of a shift in tone would this be?
Yeah, so I think if this is true and bears out, it would be a significant change, not just semantics, but as fact, if Trump basically gives that concession to Beijing, and I'm not saying that we're on that path or not. This is a Wall Street Journal story quoting sources telling that newspaper essentially that Beijing is pushing for this change in language and change in stance from the Trump administration. Beijing has tried this before many times. This has been a stated goal, essentially, and Xi Jinping brought it up with Joe Biden in their summit on the sidelines of OPEC in San Francisco. So the reporting goes that essentially Xi Jinping will again ask the U.S. administration, this time the Trump administration, if they are willing to do that. Perhaps that would be in the lead up or on the sidelines of APEC when these two gentlemen are expected to meet. Now, so that's not necessarily new, China's efforts. What would be significant is if the Trump administration gives any indication that they're willing to do this. Now, right now, if they change their language to opposing independence as opposed to it does not support independence, it sounds like semantics, but it would be a significant change in tone from neutral, and that's what the United States has always been, sort of strategic ambiguity when it comes to Taiwan under the umbrella of the Taiwan Relations Act. So it would be a neutral tone shifting to one that is more in line with Beijing's view of the one China policy. The United States acknowledges the one China policy, but does not fully endorse Beijing's view of the one China policy. So again, it's complicated, obviously. We do know that Donald Trump wants a trade deal with China, but the big question is Taiwan on the table?
Also complicated because we might see a Trump-Xi meeting next month. To what extent do you think China is going to use a potential shift in tone from the U.S. to extract such a meeting between the leaders?
Well, if they get that meeting, I'm sure Xi Jinping and the apparatus in Beijing is going to try and urge Washington to do that. Whether that's one of their levers of power or bargaining chip, we'll have to see. The big question, again, is that also on the table for the United States? It's all about give and take, but that's a significant and would represent a significant change in U.S. tone towards Taiwan. And, of course, this is a red line. Taiwan independence for Beijing, and the current administration in Taiwan of President Lai Ching-te is essentially more of a pro-independence party. They don't need to declare independence, they say, because Taiwan is essentially already de facto independent. This is a red line for Beijing. So if they could get Washington to essentially use those words, oppose independence, that would play to Beijing's hand, no doubt, in their further efforts to try and isolate Taiwan. Again, I'm sure Beijing will ask if they have that summit on the sidelines of APEC, whether the U.S. in the next month is willing to go that far in its language and officially state that. That would be quite an interesting development. I'm not saying it's going to happen, but it's going to be asked, I'm sure.
Steve, thank you for walking us through the many nuances on this. Our Chief North Asia correspondent, Stephen Engel. More ahead on the Asia trade. This is Bloomberg.
Sony Financial shares start trading in Tokyo today after being spun off from Sony Group, which is focusing on its entertainment and image sensor businesses. Japan Equity Capital Markets reporter Yasutaka Tamura is here with us. And Yasu, we're talking about the debut of the first direct listing here in Japan in more than 2 decades. This is pretty special.
Right. So, as you mentioned, that's one of the special, uniqueness of the deal. But I'd like to also mention that this is one of the rare cases of Japan's blue chip companies to, spin off the business and get it listed on the Tokyo Stock Exchange. And that's in line with the, Japan's broader efforts to improve corporate governance and, to unwind conglomerate discounts. That's one of the, factors that weighed on the nation's stocks market over the decades, along with the deflationary economy.
Yeah, so for Sony specifically, how do you think this is going to help stabilize operations? What are the things you're going to be watching for going forward?
Yes. So the deal is to aim, unlock the hidden value of Sony Group shares, and also to also unlock the value of Sony Financial Group shares. But what's really in focus is that if the deal can really, unlock the value, because as we are seeing now, our indication prices suggesting that the Sony Financial Group shares are headed to rise, above the reference price of 150 yen, which is a good sign for Sony Financial Group. And but this is just a trading debut, so we should look at the share move in the longer term to see if the conglomerate discounts are really unwound.
Could we see some technical selling pressure, though? I know that the Nikkei 225 has some new methodology as well.
Right. So analysts at Daiwa suggest that there will be technical selling pressure from index funds, those passive funds, about 1.7% of selling pressure. The estimate is that those funds could sell about 1.7% of outstanding shares at the end of the day. So that is one of the selling pressure that Sony Financial Group should face. But they also announced that they're going to buy back their own shares, so they might erase the selling pressure. So we should look at the longer term share moves.
The other thing also is potentially how we might see other spin-offs, including of its semiconductor unit. Yasu, thank you very much for talking us through this latest development. Japan Equity Capital Markets reporter Yasutaka Tamura for us. So we will be watching Sony shares when it does get traded. For the moment, on the benchmark, we are seeing the declines of about 0.7%. Clearly, the underperformance here, which is interesting because on Friday, the roll seemed to be reversed with South Korean markets. Actually, the ones that were underperforming, they seem to be pulling ahead for the moment. We have seen how some of the tech plays have been doing pretty well. It does look like in Japan, the pharmaceutical-related stocks are under pressure, along with some of the marine transport names in Japan, Shery.
Yeah, and take a look at how U.S. futures are trading at the moment after we saw gains on the Friday session. It was a little bit of dip buying after 3 sessions of losses, and you can see futures at the moment also pointing to some upside. NASDAQ 100 futures also gaining about 0.3%. Of course, as more investors are watching potentially more AI-related names broader than just a Magnificent Seven. And of course, we continue to watch the payrolls numbers coming up later in the week, not to mention a potential government shutdown. This is Bloomberg.
Oil opened lower this morning following reports that OPEC Plus will likely hike oil output again in November. India is also looking to resume imports of Iranian crude after a 6-year hiatus. Let's get to Stephen Stepchinsky, who leads our Asia energy coverage. So, Stephen, it looks like more downward pressure for oil prices despite Brent closing above $70 last week for the first time in a long while.
Yeah, I think overall the market has been in this bearish mood. There are a lot of factors playing into why prices will likely decline from here. Yes, OPEC Plus will likely increase output the same way that they did in October for November when they have that meeting. It's still not done yet, and it could be that they actually have an increase of supply higher than what they originally had in October. Now, the October increase was about 170,000 barrels, basically, and that did add to the market, but it was lower than what it's done in the previous months. Now, we might see the same sort of thing happen for November, or you could see a higher one. If they do decide to boost it a little bit more, you'll see that maybe prices will come off. Goldman is also looking at this and saying that the market is kind of facing quite an oversupply situation, not just because of OPEC Plus and their agreements, but also there is still pretty resilient production out of the United States and other rivals. Meanwhile, Chinese demand has been somewhat subdued, and the economic outlook and economic growth outlook for China doesn't look as strong as maybe in previous years. So all that combined is showing that potentially we'll see oil prices fall down to the $50 level is what Goldman is saying. So yes, we're at 70 right now. There are some factors. I think a lot of people are looking at what the U.S. does and the EU as well with potential sanctions on Russia and if that will affect flows there. But overall, I think, yeah, the market is likely in a leaning more bearish than bullish at the moment.
Okay, talk to us about the pockets of the risk to the outlook, though, because it's not like all the OPEC Plus producers are being, able to ramp up production as planned.
Yeah, that's a really good point. So when you talk about OPEC Plus, there are a number of countries. And I think often when we talk about OPEC, we look at Saudi Arabia. They're the de facto leader, right? So when you look at what Saudi Arabia has the ability to increase output for, it is much higher than a lot of other countries. Now, everyone has an equal amount that they're set to increase. But while we are saying, OPEC Plus is supposed to add over 100,000 barrels a day for October, November, the actual number will actually be likely smaller because not everyone has the ability to increase. There are other countries that were overproducing, so they're going to basically just stay still. So the market is also carefully watching, okay, how much can OPEC or how much is OPEC actually adding to the market? We're going to have a better idea of that when you look at the ship tracking data, when you look at official data out of all of these countries. And again, also, I think one other factor is Iran, because Iran does still have restrictions from the United States. And if India is able to get some sort of exemption, then that will allow more of those barrels to go to India. And then potentially you would see maybe a little bit more capacity coming out of there if everything aligns for them.
Yeah, Steve, so tell us a little bit about the demand side. I mean, you talked about India buying Iranian crude. What about buying from China, for example?
So, yeah, you do have the China view of stockpiling of oil barrels over maybe that's adding to a bit of a bullish environment. But I think, if you take a step back from China, while China does have enormous demand for oil, and while there is still an enormous importer of crude, I think you have to look at the trends of what's happening in China as well, which is there is this huge shift away from oil as a transportation fuel. There's a record amount of EVs being sold. Long-haul shipping also is going to other things, not so much diesel anymore, but maybe liquefied natural gas. That's also being electrified as well. So the China picture is one that the market is going to be watching very closely. And if you do see potentially run rates increase at Chinese refineries, or if you see some of that latent demand increasing or coming back, then you will certainly see more support in the oil market. But at the moment, or at least over the last year, the China demand story hasn't really materialized. And I think that's part of the reason why when you look at the IEA or when you look at Goldman or you look at any of these other analysts looking at how they view the oil market in the fourth quarter and into 2026, they do see a really frothy oversupply, which the IEA says could hit a record next year.
Steven Zaczynski, who leads our Asia energy coverage. Great to have you with us. Of course, we're talking about oil demand. We are also seeing some of that demand pretty strong in Europe, at least when it comes to personal spending. The U.S. personal spending data coming in better than expected also on the other side of the Atlantic. And you can see European stocks actually gain ground on investor sentiment, being a little bit more positive on that data. And we are also following some inflation numbers out of Europe this week as well, likely to show some acceleration. We're talking about 2% target by the ECB being exceeded and reaching perhaps 2.3% in September. Do also watch out for UK housing price growth, likely to have slowed down in September as well. We're watching geopolitics. A major Russian drone and missile strike on Kiev has killed at least 4 people. The Ukrainian Air Force saying that the country was targeted by almost 600 drones on Saturday. Let's bring in Bloomberg's Michael Heath for the latest on this. Mike, so what do we know about this escalating conflict between Russia and Ukraine?
Yeah, Shery, it's these attacks on the Ukrainian capital Kiev have been reasonably regular, and it almost seems, and there have been attacks on other regions as well. And Russia claims that it's targeting Ukraine's military infrastructure, but the fact that they're hitting apartment blocks in Kiev, as you mentioned, 4 people were killed, including a 12-year-old girl, another 40 injured. You really get a strong sense that this is an attempt by Moscow to try to break the morale, to break the will of Ukraine, just because all of the uncertainties that have been going on in Ukraine with will the US withdraw, how strong is Europe's support, perhaps the US is coming back, just that degree of uncertainty. And, you know, we're sort of going in towards 4 years in this war, and after a period of time, you know, the resilience of the civilian population sort of starts to come under question, and it just seems that Russia's testing that quite strongly now. What we did see also, though, is that the US and the West is going to help Ukraine get some anti-missile defence, basically Patriot missiles, I think they're called, anti-missile defence there that will help at least protect the civilian areas in Kiev. But it really is seems to be a sustained campaign of hitting the civilian areas while they're still on the front trying to push through as well. So really pressing hard on Ukraine at the moment.
Mike, this is also part of Russia's hybrid warfare. As we see the tactics evolve, how else have the parties, including the Europeans, evolved to meet that?
Yeah, Avril, what Europe's been doing, I mean, last week, just, you know, as you alluded to, we sort of had this situation of drones coming into Polish territory, unidentified drones flying over Denmark, and then we've had in the Baltic states, we've had Russian jets breaching NATO airspace. So it's sort of like a probing of the defences of Europe, and again, just a bit with Ukraine, there's just that sort of uncertainty. Where does the Trump administration stand? How united is Europe? And it's sort of Russia seems to be just testing the defences there, and how strong is the will to defend itself as well. We know that in response, or Bloomberg has reported that Europe has basically said to Russia that it'll shoot down Russian jets that violate its airspace. It's prepared to, you know, it's threatening that. Now Russia said, oh, this is, you know, unacceptable, escalation, etc. But what you tend to find with Russia, and this has happened actually before, but what you tend to find is that Russia does a lot of these things. If you take decisive action, they tend to back off. There was actually an incident about 10 years ago where Turkey, which is a NATO member, shot down a Russian jet during Russia's campaign in Syria. And while there was some tensions between the two sides after that, Russia did stop violating Turkish airspace there. So it could be that, you know, we'll see how strong Europe's will is, whether it's prepared to do that. But it does seem to be trying to put together an anti-drone grouping that will defend the eastern flank of the NATO states, the NATO area. So they are trying to fight back. But again, it's always hard with Europe. It's a bit like herding cats. How united are they, and how strong is their will? You know, logic would say shoot it down, but we'll see what they do.
Moscow really testing the European response here as well. Michael, thank you so much. Bloomberg's Michael He for us. Now, Egypt's foreign minister says Arab states are in full support of President Trump's push to end the Israel-Hamas war in Gaza. Speaking to Bloomberg, Badr Abdel-Ati also told us about the outcome of last week's meeting between Trump and officials from Arab and Muslim majority states.
It was a very, very encouraging meeting. It was positive, you know, to hear from President Trump his commitment as a president of peace to end this ugly war on Gaza, this aggression, Israeli aggression against innocent people from our point of view. So this is very important and encouraging, and also to talk about no annexation, to talk about developing Gaza where people will stay on their own land, and even those who left their homeland, they are entitled to return back. Those are very encouraging signals, of course, and messages.
Did everyone leave with a sense of unity about what the path is? And what is Egypt's role going to be in terms of the reconstruction?
Well, we have a unified Arab and Muslim position. We are in full support to the vision and the plan of President Trump to bring an end to this unjust war against innocent people in Gaza. For us, we have our plan. It's an Arab-Muslim plan for early recovery and reconstructions of Gaza, and it's endorsed by the international community, including European Union, Japan, Norway, most African countries. And what next will be, as soon as we have a ceasefire, then we will move ahead with hosting an international conference in Cairo.
When will that be?
Yeah, well, as soon as we have a ceasefire. So we are talking about 2, 3, maximum 4 weeks from having a ceasefire to host it. And we will have 3 events. One will be dedicated for private sector, for talking about security arrangement in Gaza, governance of Gaza, who will
Tony
govern
Blair,
Gaza.
the former prime minister? Do you think he could be like the governor of this authority?
No. I mean, we are talking about Palestinian ownership. Of course, they have to govern themselves.
But what do you make of that idea that's being floated in the press?
Well, again, I'm talking about the Arab Islamic vision and the plan. We are talking about security arrangement. We are providing training of Palestinian policemen. We are accepting deployment of international forces within specific parameters. And above all, the governance of Gaza will be entrusted to a Palestinian administrative committee consisting of 15 persons, all technocrats, all from Gaza Strip, and they will run Gaza for a transitional period of time till we manage to empower the Palestinian Authority to ensure the unity between Gaza and the West Bank.
Egyptian Foreign Minister Badr Abdulati speaking with Bloomberg's Anne-Marie Hordern. And another story that we're following, Thai and Cambodian troops have clashed in the border area of northeastern Thailand, exchanging gunfire and launching grenades. It's the first such conflict between their forces since they agreed to a U.S.-backed ceasefire in late July. Troops from both sides are now monitoring the situation, while Thailand's newly installed prime minister is expected to take steps to peacefully resolve the border dispute. We have more ahead on the Asia trade. This is Bloomberg.
And we're watching the China markets open later in the next hour. In the meantime, digesting some of the data from China as well. Industrial profits surged in August after months of decline, signaling that national campaigns to tackle overcapacity and excessive competition, these look like they're bearing fruit. Let's bring in our China correspondent, Min Min Lo. So, Min Min, this was pretty significant of an increase. I think Bloomberg Economics was actually expecting a decline.
Yes, it was quite unexpected and quite sizable, as you said. A 20% or so increase on year is quite significant, but a part of it is also the very low base that we had a year ago. Remember that last year in August, we saw close to 17% decline, and that was what eventually precipitated the stimulus measures that we saw in September of last year. But still, this is the highest amount of increase we have seen since November of 2023, and you can see on the chart there, year to date, we're looking at 0.9% increase versus what Bloomberg economists had predicted, which was a decline of 1.6%. But if you break down the data and look at where we are seeing the biggest increases, that's the large equipment manufacturers, especially in sectors like aerospace, shipbuilding, for example, and that has increased by 30% year to date so far. And state media has been pointing to that as an example of how successful China has been in transforming the economy into a high-tech economy. So overall, a pretty good news so far, snapping some of the losing streak that we have seen of late.
But then again, we have to ask how sustainable this is, right? So could this signal a meaningful recovery, or is this just a blip?
Yeah, it's hard to tell. We will have to keep monitoring the macro data coming out in the next few months. But if you look at some of the other data we've gotten so far, you look at factory deflation, for example, when we have been seeing a deflation for many, many months, but the deflation has been slowing down. At least the pace of it has been slowing down. So that's good news as well. But then on the flip side, you look at industrial output, that has been decelerating as well. In fact, if you look at the industrial profits numbers that we got over the weekend, downstream sectors like EVs, solar panels, they are seeing profits increasing, but sales actually declining. So that decline in output could offset some of that improvement in profits. And it shows you that final demand is still weak at this point. So more work still needs to be done. And bear in mind, we continue to expect to have that low base in the coming months as well. So that could pave the way for continued recovery in industrial profits.
Bloomberg China correspondent Ming Min Lo there. We do have more ahead on the Asia trade. This is Bloomberg. We're coming off gains from the Wall Street session last week, Avril, as we continue to watch, of course, this incredible rally around the Magnificent Seven names, especially, for example, on Apple, because we're now hearing that they could be releasing this ChatGPT-like app that's internally known as Veritas. Now, this is meant for internal use as of now, and it will be used by the company's AI division. They want to evaluate new features for Shery. This is very much anticipated, of course, this overhaul of Shery coming next year. And we know that we've been talking about Apple really lagging the other names across the board in tech when it comes to artificial intelligence. But still, we have seen an incredible rally, right? Magnificent Seven stocks taking about half of those gains for the S&P 500, which has gained about more than 70% since 2023. But it's really been about those Magnificent Seven names that could potentially broaden out to other names like Broadcom, Oracle, Palantir. We're talking about Palantir having gained about 135% this year already. You can see that chart sending all of those names and potentially a broader set of AI names that could gain ground in the next few years. We're talking about the Big Six, Elite Eight, Fab Four, whatever acronym you want to use. When it comes to artificial intelligence, there's a lot of exuberance right now.
Yeah, and as the investor space continues looking for the future winners, right, that broadening out past the Mag 7s, you talk about the incredible rally in U.S. tech stocks. It's also the likes of Alibaba and how that has underpinned the Chinese tech AI surge. And it's also worth noting how the AI developments incrementally have been supporting this, right? You think about how Alibaba has been launching its AI model, Qwen 3 Omni, so this can process multiple input forms. This includes text, images, audio, and then even the likes of Tencent. They are releasing and open sourcing some of these AI image generation models. So when it comes to the rivalry, not just in the valuations on US and Chinese tech stocks, it's also about the talent and what these technological developments have looked like from these companies on both sides. Now, China's world-beating stock rally is really also luring global money managers again, and that's allowing the market to shed its reputation of being uninvestable, which is really quite a turnaround. Our Asia Equities reporter, Winnie Su, joins us now. So, Winnie, we have been waiting to see money managers globally dip their toes back in. Now we seem to see more meaningful signs of that. Talk to us about this trend.
Yes, finally, back in 2021, China was seen as this uninvestable place, and we are finally seeing that started to change. Yes, we've got reports from sell sides coming through. Morgan Stanley saying that the Asia long-only funds have turned overweight on China stocks, China assets, and also Goldman Sachs saying that they're seeing the most activity from hedge funds recently as well. But more interestingly, we are also finally seeing that official
official data pointing to that trend. We have PBOC's data this time around saying that foreign flows are rising across all assets here, whether it's equities, bonds, loans, deposits, and that's the first time of such trends since 2021. So overall, with that net inflow through June being the higher than all of 2024 by 60%. So that really is also showing the overall appetite coming back in for Chinese assets.
Yeah, and we were talking with Avril about the potential of more attractiveness coming in the tech sector as well, given, of course, the valuations in the U.S. and perhaps more attractiveness on AI Chinese names. But what could be the risks ahead? Because there's also geopolitics to contend with.
Yeah, that's right. Well, short term, yes, we're still expecting that this trend, positive trend, to continue with that AI optimism, with money shifting away from the U.S. because of a weaker dollar. There are risks that people are watching, like you mentioned, Shery. Geopolitical tension still on the table, with the negotiations between U.S. and China still unfolding. But also, when it comes to the investors' appetite, longer term investors' appetite, lots of investors were still hurt back in 2021. So it really takes more fundamental data for them to feel more confident in investing in this market when they actually see that there are signs of economic turnaround. And when we talked about the geopolitics, there are still lots of U.S. loan only funds, especially those pension funds that are restricted when it comes to investing in China. So until that's resolved, we are likely to still see the underweight of global and EM funds on China to remain in the shorter term. So overall, yes, the sentiment is coming back, but we are also watching what the authorities might be doing. They are showing some actions when it comes to cooling down the market. So that's another area that we'll watch.
Winnie Su, our Asia equities reporter, there with a preview of what to expect on the China market opens. In fact, the China show is next. This is Bloomberg.